Welcome to our channel. Today we're diving into the current state of the US stock market and what investors need to know during these turbulent times. Let me tell you something, folks. There's no sugarcoating it. The market's getting hammered. We've got inflation soaring higher than a rocket, interest rates going up faster than a scalded dog, and don't even get me started on the geopolitical uncertainty. It's enough to make even the most seasoned investor want to bury their money in the backyard. But hold on, before you start digging, we're going to break down everything you need to know about this market mayhem. We're talking in-depth analysis, folks, the kind of stuff that'll make you sound like a Wall Street whiz at your next cocktail party. So buckle up because we're about to navigate this market roller coaster together.
All right, people, let's take a cold, hard look at the numbers, and trust me, they ain't pretty. The S&P 500, our main man in the market, is down big. And the Dow Jones Industrial Average, well, it's been doing the jitterbug, and not in a good way. We're talking about a full-blown correction here, folks, and it's enough to make your head spin faster than a roulette wheel in Vegas. But hold on, because it gets worse. Inflation is still hotter than a jalapeno eating contest, and the Federal Reserve, those interest rate cowboys, are stuck between a rock and a hard place. They're raising rates to fight inflation, but guess what? It's also slamming the brakes on economic growth. It's a real pickle, folks, and nobody knows how it's going to shake out. So, what's got the market running scared, you ask? Well, folks, it's a whole cocktail of chaos out there. First off, we've got inflation rearing its ugly head. Prices are soaring faster than a SpaceX rocket, and it's eating away at your hard-earned dollars. Then there's the Fed. Those interest rate wranglers, they're trying to tame inflation with rate hikes, but it's like trying to put out a fire with gasoline. Higher rates mean higher borrowing costs for companies, and that puts a damper on their profits. And if that wasn't enough, we've got a war brewing in Europe, supply chains tangled tighter than a headphone cord in your pocket, and an energy crisis that's making your gas bill look like a mortgage payment. It's enough to make even the most optimistic investor want to head for the hills.
Now, before you jump out the window and start shorting the entire market, hold your horses. Even in a downturn, there are always opportunities, little glimmers of hope in the darkness. We're talking about companies with rock-solid fundamentals, innovative products, and the guts to weather any storm. Think of it like this: when the tide goes out, you can see who's been swimming naked. And let me tell you, some companies are looking pretty buff. We're going to dive deep into 20 stocks that are not just surviving this downturn, but thriving. These are the companies that are built to last, the ones that'll make you say, "I told you so," when the market comes roaring back.
Look, I'm not going to lie. This market is a wild ride, and it's not for the faint of heart. But that doesn't mean you have to take it lying down. There are strategies you can use to protect your hard-earned money and even come out ahead. First off, don't panic. Remember, the market has a long history of ups and downs. This too shall pass. Second, diversify. Don't put all your eggs in one basket. Spread your investments across different asset classes, sectors, and geographies. And most importantly, have a plan. Don't just buy stocks willy-nilly. Know what you own, why you own it, and what your exit strategy is. Remember, folks, knowledge is power. The more you know about the market, the better equipped you'll be to navigate its twists and turns.
Now, I'm not a fortune teller, but I've been around the block enough times to know that the market is cyclical. What goes down must come up eventually. The big question is, when will that be? Well, folks, if I had a crystal ball that could predict the future, I wouldn't be here talking to you. I'd be on my own private island sipping Mai Tais. But what I can tell you is this: the market is forward-looking. It's already pricing in a lot of bad news. So any positive surprises could send it soaring. Keep your eyes peeled for signs of inflation cooling, interest rates stabilizing, and geopolitical tensions easing. Those are the green shoots we're looking for, folks, the signs that the worst is behind us.
Thanks for watching. Don't forget to like, subscribe, and hit the bell icon for more updates on the stock market and investment strategies. Stay informed and stay ahead. Remember, folks, investing is a marathon, not a sprint. There will be bumps along the road, but with the right knowledge and a little bit of guts, you can come out ahead. Now go out there and make some money.